We are live with a live mic. Collective on this Wednesday, January 20th. We're excited to have everybody here. I'm Robert Theobald, the Small Business Ombudsman and Vice President of Small Business Services at the Arizona Commerce Authority. We want to first start by thanking all of our community partners. We could not do these boot camp sessions without their expertise, their time, their effort, their support. So we want to thank them. We've got over 100 different community partners that are helping out with these. So we greatly appreciate them. So the Small Business Boot Camp is designed to help small businesses work through the COVID crisis and return stronger than ever. Again, it's a statewide initiative supported by our community partners, and it is a boot camp and a resource collective. This is a link to our website, and as you go to the Small Business Boot Camp website, there's a lot of information that you can find. We have the links to register for all the upcoming sessions that we have planned out. We list those on there. We have our resource collective, and then we have our archive for our previous sessions. All our previous boot camp sessions are available on this website down at the bottom of the archive. And you can search it by week and identify the different topics you may want to go back and watch if you haven't seen that webinar, or if you want to revisit one that you saw and get the information from it. We also post the slide decks that are used as a resource that you can download. So a lot of great information on this website. As I mentioned, you'll find the Resource Collective on there as well. And the Resource Collective is a website with tools and resources provided by our community partners to help support the small businesses. This is just a sample list of some of those guides and resources that you can find on the Resource Collective. Things such as unemployment insurance, guidance for restaurants, manufacturing, the Safe 6, workplace readiness essentials, etc. A lot of great information is available on that site. So quick updates, and we're going to touch on these real quick because we'll talk more in today's presentation, but PPP lending for all lenders that are participating is now open. So contact your lender if you're looking for a PPP loan, and we'll get into more details later. We've included this link right here for the Arizona lender list, PPP Arizona lender list, put together by the SBA district office out here in Arizona. Also, we have links for the Shuttered Venue Operator Grant Program, and as more information comes out about that, we will continue to update that website. And the same for the Employee Retention Tax Credit. We're going to talk a little bit more about that today as well. So for additional business resources, you can go to our Arizona Business Resources page at azcommerce.com/COVID-19. You can find guidance, financial resources, and other great information on this website. Additionally, some of the small business programs that we have here at the Arizona Commerce Authority, we have our small business services, and we can help in a number of different ways with SBA, SBDC, banks, etc. Our workforce division can help you as you work to hire new employees or upskill your existing employees with some of the programs that they have. And our Arizona MEP is a great resource for manufacturers throughout the state. Additionally, for those that are looking to start a side gig or start a full-time small business, we have our small business checklist, and it's an online interactive guide that can help, or checklist that can help you work through the licensing, registration, and compliance requirements for starting a business with the local, state, and federal levels. You can find that at azcommerce.com/smallbiz, B-I-Z. We also want to do a quick shout out and reminder for the state's COVID-19 information and resource page. This is not just business, but it's got everything related to COVID-19 for the state. ArizonaTogether.org, great website. So look at this week's sessions. On Thursday, we had scaling back up. I'm sorry, these are for next week. Got ahead of myself there. For tomorrow and for next week, we've got scaling back up, rebuilding a better business in 2021 tomorrow at 9 a.m. with Chris Ronzio from Trainual. This is going to be a quality session. Chris is an excellent speaker. It's an excellent topic that he does very well with. This would be like a keynote address for many conferences. So take advantage of it and join us. And then next week, we've got a great social media online session with Yelp and communication and reputation management for 2021. And then we're going to do a follow-up on PPP loan forgiveness next week as well. We haven't talked a whole lot about the forgiveness parts of it, so we're going to touch on that a little bit more next week. So today we've got an all-star team with us. We're really excited to have everybody, have them here to present. We've got Amber Cordova, who's been with us a number of times from Prestamo CDFI, Craig Jordan from the Arizona District Office of the U.S. Small Business Administration, and we have Carrie Ann Todd from BeachFleischman. She's been with us before, and we're excited to have her back. So with that, I'm gonna go ahead and turn the time over to Craig to let him start sharing. As he pulls up his screen, I do want to remind everybody, please put your questions, and we welcome the questions, but use the Q&A box at the bottom of your screen to ask those questions, and we'll post information in the chat. But again, for questions, use the Q&A box. So Craig, it's all yours.
Thank you, Robert, and thank you all for attending. You know, we're honored and happy to be here to present this information. We know it's been a long time coming to get these programs kind of underway. And now that we have PPP underway, we're still waiting on a few other things. So we're going to just kind of walk you through of what's available right now. We're going to walk you through what's coming very soon, like in the next couple of days to week, and where you go to get, you know, the updated information that you need so that you can be the first, you know, recipient of the programs when they come out. Hang on a second, I haven't. Okay, so we kind of wanted to talk a little bit about where we are. We do know that the PPP loan applications come from banks. You can access the lenders, as Robert put that link on the previous slide deck. That's a local list that changes often. Lenders are actually able to participate in PPP as they see fit. So what I'm saying is that sometimes a lender wants to be on the list because they're ready to engage, and sometimes lenders want to come off the list because they're overwhelmed. And so it can change often. So if you use the link that Robert provided you, just make sure that you're getting it from the outside, sba.gov/AZ, and check the date on it, because every time we change it, we'll update the date. Just so that you get the most recent one. And Robert does have the most recent one. We haven't changed it since January 8th, but it is likely over the course of the next 90 days that it'll change several times. We are awaiting further guidance on EIDL, on what are called target advances, and also the shuttered grant, the shuttered venue grant program. Those are programs that are expected to be coming out, or guidance is expected to be coming out in the next couple of days. And even though it says we're waiting on the debt relief program here, it actually came out this morning. I just didn't have time to change the actual slide, but the debt relief program, for those of you that are unfamiliar, is really if you have an existing 7A, 504, or microloan, or you're going to be getting one approved over the next couple of months. There's information within a notice that was just published last night, which many of the lenders haven't even seen yet or had an opportunity to read and disseminate. They will be reaching out, I'm sure, to their customer bases to let them know. Most of the subsidy payments, the debt relief payments, start on February 1, and you would need to contact your lender just to make sure that you qualify. The notice itself should be posted on sba.gov as well, but it's essentially for the entire SBA portfolio of 7A, 504, and microloan borrowers. So this just gives you some dates, which we've already passed all these dates. It just lets you know that any lender who is a participant and wants to engage in PPP can now engage in PPP approvals. The next date that you do need to be considerate of is March 31st. Based on this legislation, that is the cutoff date for PPP. It is important for you to know that the EIDL program, where you can borrow up to $150,000 over 30 years at a rate of 3.75%, those are open and that will be open through the end of this year, 2021. But currently the legislation has applicants needing to be submitted and approved by March 31. So just a key date to keep in mind. PPP eligibility includes a couple of different types of entities, and Amber's going to go over those in detail. She's also going to go over the eligible expenses that were expanded. Now, borrowers can select a covered period to use the loan proceeds between 8 and 24 weeks, whereas originally the evolution of this legislation was it started out you could only use an 8-week period. Then there was an amendment to where you could either choose an 8 or 24-week period. Now you can use anywhere between 8 and 24 weeks. So in other words, you can spend the money over the course of 8 and up to 24 weeks at your own discretion. Borrowers that are applicable to have an increase, it is a very limited group that can actually go back and get an increase in their original PPP loan. And there is a public notice that's regarding that. You would want to reach out to your lender, or you can look at the Treasury website or SBA's website for the document that was recently published, talking about who qualifies for increases in their original PPP balance. You do have to get an approval or apply before March 31. So a couple things, with complying with size standards, of course, and then is newly eligible entities are some housing cooperatives, some destination marketing organizations, certain 501c6 organizations, which are generally chambers of commerce, and some news organizations. What are still eligible are the regular SBA world, which is, sole props, partnerships, corporations that are eligible for SBA, 501c3, 501c19, and tribal businesses. So that is for first draw. For second draw loans, these are for borrowers that already received a PPP loan. They also need to have 300 or less employees, and they need to have suffered a 25% reduction in gross receipts. For most borrowers, the maximum loan amount is going to be 2.5 times the average monthly 2019 or 2020 payroll costs, with a maximum loan of $2 million. For borrowers that are in the accommodation and food services sector, which is NAICS code 72, or it starts with 72, they are allowed to use a multiple of 3.5 times average payroll costs, 2019 or 2020, up to $2 million. And just a note that when you're taking a second draw, you have a different loan application, and that is the 2483 SD, which stands for second draw, when applying for the second draw with your lender. And the second draw, again, was what we referred to that is completely open for borrowers with all lenders. The first draw is also open for borrowers with all lenders as well. So if you're going to be obtaining a second draw, there are a couple of eligibility criteria. First of all, you would have had to have received a first draw. You will have had to or will use the first draw PPP loan amount. In other words, spend the money before the second draw loan is dispersed. So that means that you need to have spent the money, but you don't necessarily have to have submitted or received your forgiveness. So that's an important distinction. You have to have no more than 300 employees, and you have to demonstrate a 25% reduction in gross receipts between comparable quarters in 2019 and 20. And I believe Amber goes over that in a little more detail in terms of how you would actually use your comparable quarters and how you analyze that. When we're talking about when we're talking about forgiveness, borrowers are going to apply through their lender. Their lenders are going to submit their forgiveness decision to the borrower. What are some of the updates? Idle advances are no longer deducted from your forgiveness payment. So for those of you, and there are many, many of you that received an idle advance, then subsequently processed your forgiveness and found out that under the original legislation and rules, that those advances had to reduce your forgiveness amount and therefore turned into a balance and became a PPP loan. In the legislation, that has been removed. And so the only issue with that is that the borrower who has a balance that remains unforgiven based on the idle advance, that money is going to be paid directly to the lending institution. When exactly that's going to happen, I can't tell you for sure, but I do know that it's coming in the next couple of weeks, or their intention is to come in the next couple of weeks. So if you're a borrower that landed with an idle advance balance from your PPP loan not being fully forgiven due to that amount of money, that is going to be automatically paid to your lender. Your lender should zero out that balance and then issue you a zero, a paid off notification. Or if you were one of those borrowers that actually paid off that amount because you didn't want to have that loan, then what's going to happen is your lender should reconcile with you and issue you the money that they were given for that idle advance. So that should all happen through your lender. There are also some updates to note. The PPP loans, they're not taxable income, and the normal expenses that are eligible for PPP forgiveness and that are tax deductible are still tax deductible. Expanded forgivable expenses are permissible for PPP loans, not already forgiven. And we're going to talk about those. And just for those of you that this may affect, there's been no real documentation yet on how the lender is going to be processing a reconsideration. If you've already gone through the entire process, you found out you didn't get an entire amount of money that was forgiven, and you now notice that there are expenses that you could have submitted. There is going to be a system put in place for you to get reconsideration on your original forgiveness if you have expenses that were not permissible with the first round of legislation, but now are. So you're going to have to stay tuned to that. That's probably going to affect a very small amount of borrowers, but yet it does affect you. So we're going to issue further guidance, and I'll talk to you about how you can access that later. What is coming soon is there is a simplified forgiveness application for loans, PPP loans, $150,000 or less. Now that will be something that will be out any day now, and it will simplify the process for those of you that have not actually processed your forgiveness or that haven't had your forgiveness concluded. But that, again, we have to wait for that guidance to determine if you've already submitted for forgiveness, where is that forgiveness in the process, and then you would end up basically reapplying with the simplified form. And so we'll have to wait for guidance when that form comes out, and we expect that to come out now any day. So what to do now? Contact your lender if you want to engage in PPP. If you don't have a lender, the link that Robert provided you allows you to access our local list, but we also do have matching on sba.gov/lender match, which is a system that allows you to put in your project and the lenders to reach out to you if they're interested. So I always recommend that you attempt both. Use lender match and also make the phone calls yourself. What I would tell you about lender match or using the list yourself is because, as I mentioned, the lenders can actually kind of plug in and plug out to PPP based on what their own capacity is. And so you just may need to make a few contacts if you don't have a lender that you've worked with that you have a good relationship with. It's possible that you need to roll up your sleeves and make a few contacts to see who's willing to accept your application. We're recommending that you apply with one lending institution and not shotgunning your application, because it does really create logjam issues down the road. And it's important to know that when you apply with a lender, it's the lender's loan. So it's really important that you have a good relationship with them, that they're communicative with you. If you need changes, whatever it might be, the lender is the one that quote unquote owns that loan. So your relationship with that lender is extremely important. And with communication and with finding the information, there are a bunch of ways that you can get put in or plugged into the most recent information. One of them is if you go to sba.gov and scroll down to the bottom, there's a contact us form that you can basically subscribe for, SBA's distribution list. When you do that, you'll get all the press releases for all the programs, all the updates, pretty much everything that's going on from a COVID relief standpoint. And it is very good to be on that list because you'll be notified immediately when the program guidelines become public. You can also go to sba.gov/AZ, which is our local page. And if you scroll down to the very, very bottom, you'll see that there's a little subscription email updates kind of link that you can press. And that's a very good way to make sure that you're on all the community partners list that update Robert's list, SBA.gov's list, and any of the other economic development agencies that you might be engaged with. It's good to be on everybody's list because there's a lot of information coming out. And it's just important for you to stay very plugged into the information because it does change rapidly, and you can take advantage of a program if you're first to market, so to speak. So keep that in mind. So with that, that was just the overview of the programs and how to get information and how to make sure that you're first to market, so to speak. So I want to turn this over to Amber, and thank you very much.
Good morning, everybody. Thank you so much for having me. I'm going to go into detail a little bit more about from the lender perspective. So I'm with Prestamo CDFI, and let me share my screen here. There we go. Prestamo CDFI, so we are a small lender in, a PPP lender here in the state of Arizona. And so what I'll be talking about today is from the lender perspective, as a lender who's doing PPP, the types of forms and documents we're looking for and what that actual process looks like, so that you're as prepared as possible to apply and make sure that you receive the maximum amount of PPP that you're eligible for, and so that you understand how to apply for it and use the funds correctly. So just a quick recap, reminder that this is a forgivable loan program. It is an actual loan, so you will have to sign loan documentation. You, from us and probably most other lenders, you're going to be receiving DocuSign or some other kind of electronic type of documentation, but you will have to sign a note, and it is a loan. It's a term loan of 5 years at 1%. And then once you've used the funds, if you've used them for correct purposes and according to the guidelines, you can apply for forgiveness and be eligible for up to 100% forgiveness on the loan. So do remember that it is a loan. So when you see that type of documentation coming through, that it's not confusing to you. And remember that it is intended to help keep employees on payroll and on benefits, and to help those that are self-employed. And we'll talk a little bit more about those specific categories. Just a reminder that any borrower that received a first draw PPP loan that meets the requirements for the first draw can apply for a second draw if they meet certain conditions, including the 25% reduction in gross receipts. And I'll walk you through that a little bit later on. Again, you do not have to apply for forgiveness or have received forgiveness on your first PPP loan before you can apply for the second. You just have to either have used the funds or will use the funds by the time you apply for the second PPP loan. If you didn't receive a PPP loan the first round and you're a first draw borrower, you're eligible under the same original conditions of the first PPP loan. And we encourage you to make sure that you apply sooner rather than later in order to get access to the program. And you can apply with basically any lender at this point that is accepting applications. As Craig mentioned, different lenders have different conditions and rules. So some lending institutions like banks might require you to have already had an account with them, or they might require you to be a first draw borrower with them in order to get a second draw. So you want to talk to your lender, make sure you find out if they're accepting, if they're not accepting, and what their process looks like. You do not have to use the same lender for your second PPP loan that you did for your first. You can use any lender. Your lender might tell you it's easier because they have your documentation, and that might be true. But if you want to switch, there's no reason why you can't switch to a different PPP lender for your second draw. And then, as Craig mentioned, applying to multiple lenders creates a problem and it creates a backlog. So remember that everybody's trying to apply right now, and the SBA is reviewing every single application that comes through against whatever factors they're doing for the application process. So if you've applied with 5 different lenders, you're taking up 5 spots in that queue that could potentially take away from other businesses. It can also cause issues in the system on the back end, where you get approved with one lender, but not the other lender, or an SBA number comes through, but there's a problem because you've been issued multiple approvals, and it delays you being able to actually get funding. So I would say stick with one, make an application with one. If you don't hear back for a couple days, they're not being responsive, then ask them to withdraw your application before you apply with another lender, just to prevent any of those back end issues from happening. We are always happy to take applications. We are working around the clock and have ramped up our staff. So we're happy to take anybody that is a first or second draw through our website at prestamosloans.org. And we are a local Arizona lender. Very specific PPP rules and eligibility. The program is open to for-profit businesses, 501c3 nonprofits, and it's also been expanded for 501c6 organizations. So those are chambers, membership organizations, leagues. So if you qualify, that's one portion of the eligibility. Also for your employees that you pay W-2 payroll for, as part of the calculation and eligibility, they have to reside in the United States. For the first draw, it's 500 or fewer employees. And then for the second draw, it's 300 or less. And then if you pay W-2 wages to your employees, or you have self-employment income, you're eligible to use your self-employment income or your W-2 wages as part of eligibility. The use of funds, and we'll get into a little more detail, 60% of your loan must be used for W-2 wages, owner compensation replacement, group health and retirement, and or state unemployment taxes. So at least 60% in order to qualify for full forgiveness on the loan, and the other 40% needs to be for other eligible expenses. I get the question a lot. What if I use 100% for payroll? And that's great, because the intent of this program is to keep employees on payroll and on benefits. So you can use 100% for payroll. You just need to use at least 60% for qualified wages, owner compensation, and health benefits. And when we talk about wages, we're talking about salary, hourly payments, sick time, paid time off, tips, bonuses, commissions, up to the first $100,000 in actual compensation. And on top of that compensation, you can also account for company paid for health and retirement benefits. So if you pay for a portion of the health insurance, or you do any kind of 401k matching, those are all considered eligible expenses that are in addition to the first $100,000 in income per employee. And then the term of the actual PPP is going to be 2.5 times your monthly payroll amount. And when we're talking about that, we're actually going to look at your payroll documentation and look at that to see what you actually paid in either 2019 or 2020. So we'll look at that, and that's what we use to determine. So if you are applying with a lender and they ask you how much you think you're eligible for, that may not be what you actually get, because you might just be estimating, and they're going to use your actual documents to verify those amounts. And then, as Craig mentioned, it's an 8 to 24 week covered period. So once those funds actually hit your bank account, that starts your covered period, and you have anywhere from 8 to 24 weeks to use all those funds. It's up to you. Once you've used the funds, then you can apply for forgiveness with your lender. So in order to specifically determine what your PPP amount is going to be, you're going to look at 2 things. What's your tax form that you file, and do you pay W-2 employees? And again, when we're talking about employees, we're talking about those that are W-2, that you withhold taxes from their paychecks each pay period. You give them a W-2 at the end of the year. We're not talking about 1099 contractors where you just pay them for an invoice, you subcontract out, you don't withhold taxes. Those are not considered employees or W-2 employees. Those are 1099 contractors, and they are actually eligible to apply for their own PPP loan. So if you pay 1099 contractors, you can't consider the amounts paid to them as part of the calculation. We're just talking about W-2 employees. Another thing to note is that you can use numbers from either 2019 or 2020. So you're going to want to look at your payroll documentation to see, did I pay more wages in 2019 or 2020? It's probably going to be, for the majority, 2019, because we had a lot of shutdowns and people weren't able to operate at full capacity here in 2020. So you're going to go, you can look at a couple of different forms, and we'll go specifically through the different forms, but you're going to add up all the wages you paid for the year, all of the company paid health and retirement. And remember, we're not talking about the portion that your employees paid. It's your, as an employer, what you paid for health or retirement. And you can add the state unemployment. You add it all up to get your total wages for the whole year. You're going to divide it by 12 to get your monthly payroll costs. And then you'll multiply that by 2.5. And that's going to give you the amount you're eligible for your PPP loan. Now, if you are a second draw borrower and you are in food service or accommodations, and your standard industry or your NAICS code starts with 72, and you can typically find that on your tax return, then you are eligible only for second draw food and accommodations borrowers to get actually 3.5 times your monthly payroll costs. Now, if you don't have employees, if you're self-employed, maybe you are a 1099 contractor yourself, and you file a Schedule C as part of your personal taxes, that's considered self-employment income. And you can use your Schedule C to determine what your eligibility is. You'll look at your Schedule C, line 31. If you have positive net income, then that number on line 31 is going to be what you use. You're going to divide it by 12 and multiply it by 2.5. And that will give you your self-employment PPP amount. Now, if you have $0 of net income or you have negative net income, then you won't be eligible for a PPP because you don't have self-employment income. And then if you are a partnership and you file a 1065 and you receive K1s, you're actually going to look at the K1 for each partner, and we're looking at line 14. You'll use line 14 and you'll add it together for all of the partners, multiply it by 0.9235 to account for the self-employment, Medicare, and Social Security. You'll divide that by 12 to get your monthly cost, and then multiply that by 2.5. And remember, for anybody that's a second draw PPP borrower, if you're in that 7.2 NAICS code for food and accommodation, then you're eligible for 2.5 times, but that's only for second draw PPP borrowers. So what payroll documentation can you provide to your lender? This is what we're accepting, and I expect that the majority of lenders are accepting, but every lender has the option to choose what they're using and requiring. So you're going to want to make sure you understand what your lender is looking for. But we're accepting, in terms of annual forms, the 940 federal unemployment, or the FUTA, and that's what this looks like. You can see it has all the information at the top, and then we're looking at line 3. So part 2, line 3, total payments to all employees. That's the number that we're going to use as your total payroll for the entire year. We can also accept a copy of your W-3 and your W-2s. We would prefer to have the FUTA form, but if you don't have that documentation, we can accept the W-3s and the W-2s. Just remember that all of the documents you're providing, if you're providing tax documents and payroll documents, that they have to be from the same year. So you can't commingle the years and say, I want to use my self-employment income from 2019, but my payroll from 2020. It all has to be from the same year. But it is up to you whether you use the 2019 or 2020 numbers. If you don't have your annual forms, or you want to provide your quarterly forms or provide them in addition, you can also do that. You're going to want to make sure that you provide all 4 quarters. So that's quarter 1, 2, 3, and 4. And when we talk about quarters, we're talking about calendar quarters. So if you see here on the right-hand side, I've highlighted over here in yellow. The calendar quarters are going to be first quarters, January, February, March. Second quarters, April, May, June. third quarter is July, August, September, and fourth quarter is October, November, December. So you're going to use all your calendar quarters. You're going to provide all 4 of those 941s, and we're going to be looking at column 1, 5C, the taxable Medicare wages and tips. And we will add all 4 quarters together to get your total annual wages. Now, the third choice that you have is to also provide your state unemployment forms. So here in Arizona, we have the UC 018, and we're going to look at the wage summary line 1, total wages paid in the quarter. So we'll add all 4 of those quarters together to get your total amount. If you provide this UC 018, remember that state unemployment is something that we can use as part of the calculation to determine your PPP. So if we look at line 4, we'll see your tax due. We can add all 4 quarters of the unemployment tax together to add to your PPP as well. And then you're also going to want to make sure that you provide to your lender a payroll summary report that shows the name of the employee and the total amount that they were paid in the year. This is because your lender has to verify that the wages, only the wages up to the first 100,000 per employee are being considered in the calculation. So if you have an employee that's paid $120,000, only $100,000 of their wages are eligible as part of the calculation, so they'll have to remove the $20,000 from the calculations. If you don't have a payroll summary report and you can't get one together, some lenders might also accept a copy of the pay stubs, but you're going to have a lot of pay stubs for the entire year, especially if you have a lot of employees. So work with your payroll provider, if you have a payroll provider or a bookkeeper, to ask them for these documents just to make the process easier. The quicker you get all of the documents uploaded to your lender and provide all the information, and if it's in a nice, easy form like the 940 and with the payroll summary report, it makes the process go much faster, it's much easier, and you'll end up getting your money a lot quicker. If you don't have employees that are W-2 employees, or you are self-employed, then there's different tax forms that you're going to provide, because you're not going to have W-2 wages. So your loan won't be based on those W-2 wages. So the other types of things that you're also going to want to provide are your articles of organization. If you don't have your articles handy, a lot of people don't have them sitting around. You can go to the Arizona Corporation Commission. There's a way for you to search. You can actually find your name. You can verify that you're in good standing with the Corporation Commission, and you can pull down the most recent copy. You can pull down amendments. If you're not incorporated in the state of Arizona, then most states have the ability to do that through their Secretary of State, their Corporation Commission, however, or whoever you file with. So look online and try to make sure you have those handy, because the lender will need to verify that the individuals that are listed as owners of the business are those that are who are applying, and just double check all of that. As the owner of the business, anybody that has 20% or more ownership is going to have to provide their personal information as well as their identification. So be prepared with that. And then the types of tax returns that you're going to want to provide, if you're self-employed, if you're a sole proprietor, if you're a single member LLC, it's likely that you have a Schedule C that you file with your 1040 tax return each year. If you're a partnership, you're going to have a 1065 partnership tax return. And remember that we'll be looking for those K-1s to determine your self-employment income. And we're looking at line 14. And then if you are a corporation, you're going to have an 1120 or an 1120S, or if that's how you've designated to file. The only way that a corporation or a nonprofit is going to be eligible for a PPP is if you paid W-2 wages. So just make sure that you're prepared for that. An 1120 or an 1120S or a nonprofit that files a 990 or similar, you don't have self-employment income, so that won't be an eligible portion of your PPP. It's just going to be based off those total wages. If you're a Schedule C filer or a 1065 partnership with a K-1, that's where your self-employment comes from. and you can use your self-employment income and your W-2 wages. So if you file that Schedule C and you have a net income, but you've also paid W-2 wages, you're able to use both of those as part of your calculation. So make sure you provide all of those documents to your lender. If you're not familiar or you're not really sure where to find the information on your Schedule C, it's a part of your personal tax return, the 1040 that you file every year, or that you should be filing every year with the IRS. It's called the profit and loss from business. All your information is up there at the top. And then if you look at line B, enter code from instructions, that's where you'll find that NAICS code or that standard industry code. And you'll see if you file starting with a 7-2, and you should know if you're in food or accommodations. And then you're going to be looking at line 31, the net profit or loss. And remember that your net income must be positive. So if it's 0 or negative, you won't be able to use self-employment income, because according to tax records, you don't have self-employment income. And this can be confusing because you might take draws, you might pay yourself, and you might think that you have payroll, but from a tax perspective, you don't, and that's what the program is based on. One thing to note, if you have not filed your 2020 taxes yet, and this is only for Schedule C filers, for 2020, you can file a draft Schedule C and use a draft Schedule C. You can find that on the IRS website. You can fill out the draft 2020 tax return and use that for eligibility. But just remember, it's really important that if you complete a draft Schedule C and you use it to determine PPP eligibility with your lender, that is the form you have to file with the IRS with your taxes, because you're going to have to provide the as filed tax return to your lender when you apply for forgiveness. If you've changed it so that it impacts your net income, it might impact your forgiveness and reduce your forgiveness if you've changed those numbers. So really important to make sure that you're staying consistent there. How can you actually use the PPP loan? Remember, you can use 60% for payroll, and we're talking about wages, tips, vacation time, sick time. You can also use it for health and retirement benefits, and that includes life, dental, vision, and disability. And then retirement benefits, if you have 401k or some kind of pension matching, and then state unemployment taxes. This isn't the taxes that are withheld from the paychecks that go to the state, it's just the unemployment portion. And then the other 40% can be used for eligible expenses, and those are going to include operations expenditures, and so that's business rent or lease, utilities, mortgage or fixed loan interest, and just the interest portion only, and only the current portion. You can't prepay any interest. And something important about this is that these had to have been in effect on February 15th, 2020. So if you signed a lease after that, you're not eligible to use that, and the lender might ask you for copies of your lease agreement or your utility agreements. Anybody to be eligible for this program had to be in operation on February 15th, 2020. There's also some new provisions in the latest round of legislation that allows for operations expenditures such as software, cloud computing, human resources, or accounting needs. So out of the pandemic, if you had to move to online virtual world, those subscription fees or the different type of software that you might need, like Zoom, that's something that you can use the proceeds of your PPP for. Remember that when we're talking about these items, these aren't used as part of the calculation for determining how much you're eligible for. That's only your net income or the W-2 wages that you paid. So none of these things will be a part of how to determine, but you can use the PPP loan that you get to pay for these items. If you had property damage in 2020 as a result of public disturbances and you didn't get reimbursed from insurance or some other source, you can also pay for damage repairs through the PPP loan. And then also worker protection. So if you need to purchase PPE, adaptive instruments, if you need to buy the clear guides that go between booths for a restaurant, These are all the types of things that are for health regulations and health compliance. So you can use the PPP up to 40% for these items and still be eligible for full forgiveness. So remember that 60-40 split. 60 needs to be for payroll. The other 40 is just for these eligible expenses. You'll have to provide your lender with documentation on how you use the funds. If you don't use the funds, at least 60% for payroll and 40% for these other eligible amounts, your forgiveness might be reduced. And it's reduced based on a sliding scale. It's not all or nothing. Again, your business start date must have been February 15th, 2020. And when we talk about in operation, we're talking about you had expenditures, you had income coming in. If you started as a sole proprietor and you didn't get an LLC until later in the year, that's fine. As long as your business was in operation, and you'll show that through providing a bank statement, a February 2020 bank statement, your lender should be able to see that you had income and expenses. For second draw, you can have no more than 300 employees. You have to have a 25% reduction in your gross receipts. So you have to show that in 1 quarter of 2020, you had a reduction of at least 25% in your gross receipts as compared to that same quarter in 2019. So for a lot of businesses here in Arizona, we had our big shutdown in second quarter. You might have seen a huge reduction in your 2020 quarter 2. So you would look at 2019 to say, did I have a 25% reduction? If you started your business in 2020 or at the end of 2019 and you don't have all that information for 2019, you can use the first quarter of 2020 as your baseline and compare quarter 2, 3, and 4 of 2020 against quarter 1. If you saw a reduction of 25% or more in quarter 2, 3, or 4 compared to quarter 1, then you qualify. And remember, when we talk about quarters, it's the calendar quarters. You can't just pick and choose any 3 months of the year. It's, first, second, third, or fourth quarter. And then again, as a reminder, you can use any lender. It's up to you. You have the choice, and you don't have to use the same lender for your second draw. I have a spreadsheet that I created that's pretty easy. You can just pop in your monthly if you don't have a profit and loss statement or any other type of documentation that you keep regularly. You can pull your bank statements and put your gross receipts that you have a month. We can put the spreadsheet in that, so anybody can feel free to download it. It's just an Excel file, and it'll automatically tell you which quarter you might qualify for. So just a really quick recap, when and how to apply. The PPP program is open to first and second draw applications now through all participating lenders. We would love it if you would apply through us. Down at the bottom, I have the lender match website as well. So you can go on and look and see what lender might match for you. Again, we're looking for borrowers who pay W-2 employees or self-employed individuals with positive net income on their Schedule C or on their K-1s. First draw is 500 employees or less. Second draw, less than 300 employees and a reduction of 25%. Use it for eligible expenses. Maintain your full-time equivalence accounts. For additional resources, Prestamo have a Prime program. We also do a lot of webinars, and then we'll be working on opening up the Women's Business Center in the next month. We provide no cost assistance in helping get prepared for PPP as well, no matter what lender you're going through. And then there's also some additional resources, some that Craig and Robert have talked about, but there's SCORE, Small Business Development Centers, the Southern Arizona Women's Business Center. That's not Prestamos, that's with the YWCA. And then the Veterans Business Outreach Centers, the VBOX. And this presentation will be available afterward if you want to be able to get any of those links. And with that, I will hand it over to Carrie Ann.
All right, let me get my screen shared here. Okay, so we're the rest of the time here, and we're probably going to go a little over just so that I can make sure to get through all of these slides. We're going to talk about the employee retention credit. And just to clarify, the employee retention credit is completely separate from the PPP. But I'll explain to you later why we're talking about it today in a PPP session. But just remember that the PPP and the ERC are totally separate programs, and you can take advantage of both. The information is going to be very high level. It's based on what we know today. If you have more detailed questions, I would suggest you reach out to a CPA for assistance, because there is a lot of math and it is really detailed. Okay, so the employee retention credit. From here forward, I'm going to call it the ERC. And you'll see on my slides that it's called the ERC. So you'll know what that means. All right, so the Consolidated Appropriations Act, which was passed in late 2020, right after Christmas, did two things. It removed the prohibition against companies who receive a PPP loan from taking the ERC. That's why we're talking about this today. Prior to this act, anyone who got a PPP loan was not eligible to take the ERC. The Consolidated Appropriations Act removed that prohibition. So now if you got a PPP loan, you can go back and claim the ERC for 2020. So it's very important that you kind of, look to see if you're eligible, and we're going to go through all the eligibility rules. It also extended the ERC through June 30th of 2021, but it modified the rules a little bit for 2021, which makes it more lucrative, meaning you can get more money and it's easier to qualify for. So stay tuned as we go through all these slides. When we are talking about the credit is computed using eligible wages and allocable healthcare costs. Eligible wages is basically gross wages paid during the relevant period, and you'll see that defined. And then allocable healthcare costs are costs for insurance that are related to the relevant period. They could be paid earlier or later. So think about your health insurance bill, right? You might pay it the month before, you might pay it in April for May. So the timing of payment of the healthcare cost is not as important as the timing of the payment of the wages. Okay, so the credit is available from March 12th through December 31st for 2020, only wages paid during that period, and January 1st, 2021 through June 30th of 2021. The eligibility and the credit computations are different for 20 and 2021, so we're going to address each year individually. Okay, so blue slide, we're going to talk about 2020 first. So all of these slides coming are just 2020. When we're going to start talking about 2021, I got another blue slide so you can differentiate between the two years. Same program, different rules for different years. So for 2020, there are two different ways you can be eligible. If your business had operations that were fully or partially suspended due to some government COVID order, whether it was the governor, your county, the CDC, your mayor, whatever it was, if you were partially or fully suspended, you're eligible for costs during that suspension period. Okay, not the whole quarter, just the time that you were fully or partially suspended. Or, and you see the big star here, this is an or, your business experienced a significant decline in gross receipts during any quarter in 2020. And a significant decline is basically defined as a 50% decline. We're going to go through the math of how that works in a couple slides here. So for that first bullet, if you qualify because you had a full or partial shutdown, you need to document the specific government orders that caused your shutdown. And you can get those on the website of whoever shut you down. They've posted all of those on their websites. Like I said, only wages and allocable health costs paid during that shutdown period are eligible for the ERC. For the second bullet, the gross wages calculation, the gross receipts calculation, you're going to have to look at your 2020 and 2019 gross receipts. Okay, you're already kind of doing this for PPP second draws, but the computations are different, of course. So you need to use the accounting method that the company uses for internal accounting or your income tax method of accounting. If you don't maintain quarterly records, you can compute the annual gross receipts and meet the 50% test. So if your 2019 gross receipts were 50% more than your 2020, or conversely, if your 2020 gross receipts were half or less of your 2019 gross receipts, you would meet this test. You don't have to compute it quarterly. It's just an option. Okay, so here's an example. So in our example 1, you can see that when we're comparing 2020 to 2019, in the first quarter, they actually had more gross receipts. So they're not eligible for the ERC. You can see in the second quarter, their gross receipts for 2020 were only 42% of 2019. So that quarter, all wages and applicable health costs paid in that quarter are eligible. Then you go to the third quarter. They're still below 80%, so it's an eligible quarter. So the rule is the first quarter that you go below 50, you're eligible, and you stay eligible until your gross receipts go above 80% when compared to 2019. So you can see in this example, even though they went above 50 they were at 50 for the third quarter and they went above 50 for the fourth quarter, they're still eligible for all 3 quarters. Okay, let's look at our second example. You can see that they become eligible in the second quarter because they drop below 50. They're still eligible for the third quarter, but they're not eligible for the fourth quarter. So the stopping point is the first day of the quarter after which you go over 80. So hopefully that's kind of a visual representation of how the rules work for determining which quarters you can compute this credit on. So it's dependent on how much credit you get is dependent on how many employees you had in 2019. Now it's really important to pay attention to all the years here because it kind of skips around. So when you're computing your number of employees, you're going to look at the employees you had in 2019. You're only going to look at full-time employees, and a full-time employee is anyone who averaged more than 30 hours a week. And the formula for computing your number is the number of full-time employees in each calendar month in 2019 divided by 12. That's the number you want to get to. So if you want more details on how that works and what if I this and what if I that, the IRS has an FAQ that goes on and on and on about computing your average number of employees. So I suggest you hop into that. If you have 100 or fewer full-time employees under that computation, you can use all wages and healthcare costs paid during that affected period or quarter, minus any FFCRA wages. If you have more than 100 employees based on that formula, you can only take the credit on wages and healthcare costs paid to or for employees who were not working, meaning literally paid while staying home and not providing services. And that's a big distinction. You cannot take it, if you're over 100, you cannot take it for employees who kept working and provided services for you. All right, the credit is the first 50% of the first 10,000 in wages and applicable health costs paid during the affected period or quarter to each eligible employee. The maximum credit for 2020 is $5,000 per employee. So even if you're eligible for all 3 quarters in 2020, the max credit is still based on the first 10,000 paid in 2020. Okay. All right. There's 4 restrictions, of course, on this credit. The first restriction is you cannot count any wages that you've already counted for FFCRA, and you cannot count any wages that you're claiming for the work opportunity tax credit. Okay, restriction number 1. Restriction number 2, wages paid to relatives or family members do not qualify. So let's say I have a business, and in my business, my husband, my 3 kids, and 20 other people work for me. Okay, I can take the credit for myself, but I cannot take it for my husband or my 3 kids. I can then take it for the 20 people that work for me if they qualify. Okay, so that's a good big restriction. And the definition of relatives, you need to look at that because it's more than just spouse and kids. Okay, restriction number 3. Any wages used in the computation of the ERC are not eligible covered costs on the application for forgiveness of a PPP loan. So those of you who've already filed for forgiveness or you've already received forgiveness, you can retroactively claim the ERC, but it gets dicey and we don't know exactly how we're going to do that. You can go back and calculate it, but then somehow there's got to be some mechanism for informing the SBA that basically says, hey, I reported these wages to you for my forgiveness, but now I'm going to recharacterize those as ERC wages. So anyway, I could spend 30 minutes talking about this slide, but I'm just going to give you this information here so that you'll know that if you've already filed or received forgiveness, you're probably going to have to do more work than if you haven't filed for forgiveness yet. Okay, restriction number 4. There are aggregation rules if you have a bunch of related businesses. Okay, I don't even know what they are in detail, but if you have a bunch of related businesses, you need to look into these aggregation rules and make sure you follow them. Okay, you claim the credit on the quarterly Form 941. If you have a credit in excess of your quarterly employment tax deposits, you can request an advance payment on IRS Form 7200. Here's a link on all about that. Like I said, we're going to go a little past, so I hope you have time that you can stick around because we're going to go through the 2021 credit also. I'll go through it faster because a lot of the rules are the same. So there's an article on our website that talks about the ERC 2020 in more detail. You can read that. The IRS also has extensive FAQs, and I do mean extensive. I think there's 100 questions and answers about computing the ERC, and there's the link to that. Okay, here's the blue slide. We're switching gears. We're moving into 2021. Okay, so everything I say from here on out is about 2021, not 2020. Okay, so for 2021, there are, again, 2 ways to be eligible for the credit. One is a full or partial suspension of operations, same definition as for 2020. Okay, the second is a significant decline in gross receipts, but now the test is 80%. Not 50. Okay, so you just have to, it's 80% of the gross receipts you had in 19, which if you're thinking about it in terms of a reduction, it's only a 20% reduction. But the way the law is written talks about it in the inverse. So anyway, I'll give you an example that shows you how that works. But again, we're comparing our gross receipts to 2019, not 2020 for the most part. Sometimes we are. Same for the first bullet. If you've got a full or partial shutdown, get a copy of those orders, keep them in your record so that you can define the period for which you were shut down so that you calculate the credit properly. For the second bullet, you're going to have to look to your 2021, 2020, and 2019 gross receipts. Okay, and you are going to have to look quarterly. There's no annual test here. There is a look back rule that says if you don't meet the test for a quarter, you can look at the immediately preceding quarter. Okay, as if it wasn't complicated enough. So let's look at an example of that. So here's my example 1, 2019 compared to 2021 gross receipts, it's January 20th, right? You don't even know what your gross receipts are for 2021 yet. So this is something that you're going to be looking at and computing by the end of March, right? When you have an idea where you're at. So in this scenario, my 2021 gross receipts for the first quarter are 70% of my gross receipts in the first quarter of 2019. That's below 80%, so that quarter is eligible. Quarter 2, I'm at 75%. That's below 80%, so that quarter is eligible. Okay, the ERC is only a program for the first 2 quarters. That's why there's only 2 quarters of data. Now, if we pop over to the right, here's an example of the look back rule. So the look back rule, I would look at 2019 first quarter and I'd be like, okay, my relationship is 90%. I don't qualify. But under the look back rule, I can look at the preceding quarter. So I can compare my Q4 2020 to my Q4 2019. And if that number is less than 80%, then I qualify for Q1 of 2021. Okay, and then you would basically do all the same things for Q2 of 2021. So anyway, hopefully that helps. It's confusing. I changed the slide 3 times while Amber and the SBA guy, whose name escapes me at this moment, were talking. So it's a lot of math. It's a lot of math. So the credit is dependent on how many employees you had in 2019. Once again, same. The formula is the same, computing how many employees you had. Now, the big news is for 2021, the number is moved from 100 to 500. So if you have 500 or fewer full-time employees in 2019, you can use all the wages during the affected quarter, okay, minus any FFCRA. That's huge. That just like quadrupled the number of businesses that are going to be eligible for this in 2021. Now, if your business had more than 500 employees, you're not out, but you can only take it on wages that were paid to employees who were not working. So if you have any employees that you're still paying to stay home and not work, you could take the credit for them. All right, what is the credit? Instead of 50%, it's 70%, and you compute it independently for Q1 and Q2. So you could get $7,000 per employee for the first quarter and $7,000 per employee for the second quarter. So the max credit for 2021 is $14,000 per employee. So if you're doing the math here in your head and you've had some significant disruptions to your gross receipts, you could potentially claim $19,000 per employee under the Employee Retention Credit Program. Okay, that's big dollars. So it's a lot of math, and it's going to take a lot of focus and attention to detail, but you can see that there's a lot of money at stake that you could be qualified for if you're willing to do the work. So it's just like the PPP. If you're willing to do the work, huge benefits for you, same for the ERC. Okay, so the 4 restrictions I talked about before, exact same for 2021. So I'm going to skip through those really quick. I'm going to pop back to this one actually. Okay, so the restriction that you cannot use ERC wages for PPP forgiveness, if you're applying for a second draw loan or a first draw loan in second round, you now have time to plan ahead, right? And look at your wages, excuse me, and say, okay, I'm going to use these wages for FFCRA, which I think has been extended to March, end of March. I'm going to use these wages for ERC, and that leaves me with these wages for PPP. And you can decide ahead of time if all that's going to work out. Now, if you use wages for ERC and you're not left with enough wages for PPP, then you need to not take the ERC credit, right, on a certain amount of wages, because the ERC is a 70 cents on the dollar, whereas the PPP is $1 for dollar. So the PPP, you get more bang for your buck. So that's why you want to prioritize your wages, FFCRA, ERC, PPP, but there are situations where you may not want to take the ERC so that you can guarantee full forgiveness on the PPP. And if you followed all those acronyms, then you get a star for today. Okay, same restriction number 4. Same thing, you're going to claim the credit on your quarterly form 941. So for the first quarter, that's due in April. For the second quarter, that's due in July. There's a link here on how to do the credits. And I think I got through that all. So I haven't had a chance to look at the Q&A. Let me see if I can pop that up real quick.
So Carrie Ann, we're good on the Q&A.
Good on the Q&A?
Yeah, I appreciate Carrie Ann and Craig and Amber and Faith for answering the questions throughout the webinars. They came up in the Q&A. We appreciate that. And want to thank everybody for those questions. Carrie Ann, I did post in the chat the link to the IRS website that you had in your presentation for the ERC. One question we had in there as well, and that is about this webinar. It is being recorded and will be posted on our website at the Small Business Bootcamp later today, along with the presentation materials from all 3 of our presenters. So I want to thank Carrie Ann, Amber, and Craig for sharing their time with us this morning. I appreciate all those that stayed on a little bit over the 10 o'clock hour to listen to the ERC. As Carrie Ann mentioned, there is potentially a lot of money available to businesses that go through the work for that. So we appreciate our time preparing those slides. With that, we want to go ahead and wrap up. Again, we want to thank all of our experts for being here and thank all of our attendees for taking the time to be with us this morning. And we want to finally do a reminder for tomorrow morning, 9 a.m. We've got that great boot camp session with Chris Ronzio of Trainual. Please join us. I look forward to seeing you tomorrow. With that, have a great day. Thank you.
Bye, thank you.